morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. We are streaming live in YouTube. And what I would like to do here on this segment is share with you the latest report that we published in Seeking Alpha for the benefit of our subscribers. And I'm sharing this with you as a courtesy to show you the different work that we do, the different way that we share this artificial intelligence that is produced by the variable changing price momentum indicator.
Hi everyone, this is Equity Management Academy with the weekly Bitcoin report for September 24, 2021. Summary. The weekly trend momentum of 44,943 is bearish. The weekly VCPMI of 43,687 is bearish price momentum. A close above 43687 stop negates this bearishness neutral. If short, take profits 39,618 to 36,152. Trading instructions. Weekly trend momentum, 44,943, bearish. The contract closed at 42976. The market closing below the 9 WSMA 44943 is confirmation that the trend is bearish. A close above the 9 WSMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum, 43,687, bearish. With the market below the VC weekly price momentum indicator of 43687, it confirms that the price momentum is bullish. A close above the VC weekly, it would negate the bearish signal to neutral. Weekly price indicator. Exit. Longs, sell 1, 47,153. Sell 2, 51,222. Exit. Shorts, buy 1, 39,618. Buy 2, 36,152. Cover short on corrections at the 39,618 to 36,152 levels and go long on a weekly reversal stop. If long, use the 36,152 level as a stop close only in good till cancelled order. Look to take some profits on longs as we reach the 47,153 to 51,222 levels during the week.
Now, what we're looking at here is basically, let me share the real chart here, and we can analyze pretty much what the data is telling us. Bear with me here. As we take a look at the real-time chart here, what basically the AI was able to identify here for us, if you take a look at the right side of the chart, we're looking at this week's data that was identified by the VCPMI. And it basically is telling us that if we take a look at the weekly average here, that we are trading around the weekly average, which is a choppy area, but we've come up here from this level of 40,802, which was the daily signal that activated a buy trigger daily. And automatically the target was identified as the level above. So it has completed the daily target and also the weekly target, which is basically the average price. Now, the market has been trying to pretty much discount the Evergrande news that came out last week with regards to China's largest real estate holding company that is about to default on about $300 to $400 billion in liabilities. Bond payments are due, and they have gotten a 30-day grace period, and we have yet to see if they are going to work out some kind of a contract with the government in terms of being able to get some help and essentially not subsidized and subsidize, I would say, the tremendous problem that Evergrande has with regards to interest payments, that if not, we're going to see that reflected in the world markets. It's going to cause a lot of volatility in world markets, and we have to see basically how it relates to some of these investors that have a great deal of capital committed, foreign investors, you might say, that have a great deal of capital committed in China. But if we come back to the market here, it seems that Bitcoin pretty much has almost regained what it lost last week, and it's showing resilience. The market itself is trading around the average price, which is 43,687, and we can see if we get a basically bullish price momentum unfolding here, which is basically the velocity of price to the targets within the bigger trend that was identified. And so the initial targets on a weekly basis that we're looking at for Bitcoin is 47,153 to 51,222, which represent an area of resistance on a weekly basis. It represents the area of pretty much distribution of supply. This is where the VCPMI tells you that you want to be looking for supply to come into the market. Now, in order for us to see where the highest probabilities are as a trader, as a self-directed trader, in what I'm coaching and teaching in my live trading room, is pretty much how to use this algorithm as a GPS for your trading, and depending upon your profile, once you identify the direction of the market, neutral bullish or neutral bearish, then you can begin to plan how you are going to execute and manage the risk, and defining the instruments, defining pretty much what's comfortable for you, and also according to your schedule. If you're a committed day trader, or basically if you're a swing trader or a position trader, this will give you the probabilities mathematically where the market is. So what this is saying for us here with regards to Bitcoin, that if we see a rally up to this resistance levels of 47,153 to 51,122, to 22, that we can potentially expect some supply to come into the market. So this is a prospective look that it gives us. It gives us the ability to forecast, you might say, the extreme levels of speculation in the market. And obviously, depending upon the exchange of supply and demand at those levels, if the demand underneath is stronger, obviously, than the supply that's coming in, especially if it's speculation, if it's retail, more than likely this level is going to confirm how strong the buyers are up here. And so if we see the market continuing to rally through the distribution of supply area, it's indicating that the buying is solid, it's very strong, and it's taken out all of the offers of supply that are available up in this level. And upon breaking through the sell one level, as you enter into this level of resistance, when the price closes above resistance, that resistance becomes the support for the next higher fractal in price. And if we, in this case, close about 47,153, ideally, if we take a look at the daily 47,668, there is a high probability that this level is going to become the support for the target of 51,222. So right now, the signal for day traders is neutral. And the highest probability of the trade is basically for the market to trade at the extreme above the average price of, again, sell one of 47,153, or come down to the buy one level in blue that you see here, which is 39,618. The area in blue represents the opposite of red, which basically means accumulation of supply. And this is where the algorithm tells you this is where you want to be looking to buy the market. If you see here, for example, the market got up to this level last week, about 1:45 a.m., and activated a reversion back down to the mean, testing the target of the mean and trading at the extreme below the mean, reverting from the buy one level that begins to identify where the accumulation of supply should be, where you want to be adding or accumulating long positions. It reverted from the buy one level, as you can see, meeting the target of the average, basically, which is what the reversion to the mean principle is all about. The principle is that the market will reach these levels mathematically, which are extreme levels that identify resistance or speculation, and expect, again, supply to come in, that it would revert the market down. The first target is the mean or the extreme level below the mean. The perfect Fibonacci structure gives us 5 levels that we trade, 5 pivot point levels that we trade. The colors are identifying basically what the algorithm is telling us, where the supply and demand is, and the trigger point is the algorithm that tells you where to go long. And when you go long, basically, you can put your protection right below the market entry point at the pivot point you enter. And we recommend that you do not use straight stops. Do not use straight stops, because what happens is when you use straight stops, the majority of traders will get stopped out. And this is the principle, obviously, of the metals markets that are applied heavily by central bankers that are heavily short and take out the stops. So, in this case, what we recommend is, depending upon your profile, that you have three choices of stops. The most conservative one is a close below the pivot point that you entered initially. So automatically, when the algorithm identifies the entry point, it gives you a protective level, and your target is the level above. And in this case, from buy one, your target is the average. If it goes up to above the average and activates a trigger point from sell one, like it did here on the 24th, automatically your target is the average price. Now, when the market trades around the average price after it completes your target, the market trading below the average price will identify the trend momentum, the velocity of price reaching the target. It completes the target, it activates a buy trigger, it gives you a protective level, conservatively a close below. Or if you're an aggressive trader, you can use a maximum catastrophe stop. I use $1,000 maximum catastrophe stop that, regardless of what happens to the signal, the market, I will liquidate that trade and see and take a look at it again. But at least it gives me a very clear idea in terms of my risk and what I'm willing to risk on the trade. And this is personal. So you have to reach a comfortable level within yourself to use your dollar stop according to your profile. The third stop is basically the level below, the buy two level. If you're willing to enter into multiple positions, this is ideally how you can enter multiple positions, where you enter initially on the signal, and if the market is generous enough to test or come down lower, then you can build and buy at these levels and average down. And you can put your protective level at the buy to close below. So in this case, it did not give you the opportunity. It ran up, met the target, and now it's trading around the average price. So we allow for the market to do what it's pretty much is going to do anyway, but it's telling us that when the market is trading around the average price, it's a 50-50 standard deviation, so it could go either way. Let me take a look and see what silver is telling us for this week.
Hi everyone, this is Equity Management Academy with the weekly silver report for September 24, 2021. Summary. The weekly trend momentum of 24.16 is bearish. The weekly VCPMI of 22.53 is bearish. A close above 22.53 stop negates this bearishness neutral. If short, take profits 21.91 to 21.41. Trading instructions. Weekly trend momentum 24.16, bearish. The silver futures contract closed at 22.34. The market closed below the 9 SMA 24.16 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum 22.89, bearish. With the market closing below the VC weekly price momentum indicator of 22.89, it confirms that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish signal to neutral. Weekly price indicator. Exit. Longs, sell 1, 23.45. Sell 2, 24.58. Exit. Shorts, buy 1, 21.77. Buy 2, 21.18. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 21.77 to 21.18. And go long on a weekly reversal stop. If long, use the 21.18 level as a stop close only and good till cancelled order. Look to take profits on longs as we reach the 23.45 to 24.58 levels during the week.
So let's take a look at silver. In real time, and pretty much what it's telling us here. On the right of the chart, once again, you're looking at the weekly numbers. So the market is trading above the average price. So it is in a neutral to bullish price momentum that has activated the target of 2304. A close below 2253 will be negating this signal, and another close below, especially under the daily close of 2243, it will be activating a bearish price momentum. And so right now we're in a bullish price momentum, and we want to see what the market does when it gets up to 2304 to activate a signal. So I make a point, and I recommend to my traders to, if you're going to trade, again, to trade the highest probability trades. And in the application of the VCPMI, pretty much as a GPS, it identifies for you where the highest probability trades are, or where the extreme levels above the market are. And in this case, once again, we are beginning to enter, if we take a look at the daily, into a resistance level of 2277 to 2313. This is the area that is telling us that we can potentially see supply come into the market. So the signal from 2207 that was activated last week, actually 2202 is when we recommended to go long, has completed the target of the mean and also has reached the sell one target of the extreme above the mean. and now it's neutral to bearish because it met the target and it gave a short trigger signal by closing below 22.77. Now, this signal, unless it's negated with a close above 22.77, has a target of 22.53 once again. So if you want to go short, then use the level of 22.77 as a protective stop level on a close above right away. And this is pretty much how I identified day trading for the VCPMI, using it as a GPS. Let me take a look at the TradeStation platform here. We pretty much are looking at the same information here. And what I want to do here is I want to take a short trigger. We're going to sell. We're going to sell at the market.
Order filled.
Sell a December silver at the market. For my guys in my Discord trading room, sell a December silver at the market and use a close above the 2542. Excuse me, the 2588 level to stop out. Now, this is an aggressive trade. Obviously, that is going against the short-term bullish trend that we have, but it's a day trade. So, regardless of what happens to this trade, we are in a long-term long position as a core. We're bullish, and we are buying corrections in the market, particularly as we're coming into this completion of the 360-day cycle, which begins the seasonal pattern as of September 28 for our calendar year. We're going to be looking at some more data this week. It's a critical week here, and we're going to continue to monitor, you might say, the reaction of Evergrande's in the global markets, in particular in interest rates. So once again, everybody, I want to thank you for the opportunity to share this information with you, and I'll see you next time. In the meantime, be well, take care of yourself, be safe, and I'll talk to you soon.